For more on Meta's quarter, let's bring in fast money friend Gene Munster of Loop Ventures. Gene, what do you make of this 18% bounce?
I'm relieved. Loop is a shareholder and relieved on that. I think that the 2 billion DAU number, keep in mind that they had a headwind with DAU related to Eastern Europe. And I want to just emphasize on that quickly, Melissa, is the DAU number is the network. That is the core value ultimately, which Facebook has. We know that. That's the reason why Elon Musk bought Twitter. He could have started his own social network, but getting those connections in place is critically important. So maintaining that in the face of TikTok is a strong evidence that this network effect is still valuable. So that's part of the bump. I also would point out that ARPU was up 4% year over year. And as we think about that handoff between stories to reels, to this competitor to TikTok and the monetization piece, they are actually making headwind. They're making progress in terms of making more money from each user. And so there were two pieces that were most encouraging around this. Unfortunately for investors, is they are still going to hear a lot about TikTok from their people around them, potentially use TikTok themselves a lot. And I think that some of that concern is not going to go away on this print. We're going to fast forward 3 months and we're going to be on pins and needles to guess what that DAU number is. But at least for tonight, we can rest well knowing that that platform, that network is intact.
So, Gene, when the company tells us that the ad tracking changes are going to cost or potentially could cost $10 billion in 2022, and that's coupled with who knows how many billions for metaverse ramp up from there. Even though this was a great relief rally and you mirrored that sentiment, do you think there's just too much gray area right now for the person who's not a believer to invest a new dollar in the market, in Facebook, in Meta right now?
I think just you have to take into consideration what the valuation is, some of the thoughts that Karen has, and all that's true. Everything you said is absolutely true. And it's also true that it's assuming they can hit that number for next year, which I think is doable, that it's trading right now at 14 times. And so when you think about gray areas, I think about it in the context of valuation and relative to the opportunity. And so, yes, those two factors, IDFA and navigating that, they have to build their own ad tracking platform. That is going to be a piece to it, TikTok. But there's also this sense of owning a company that can essentially make a shot at the metaverse. I am a believer in the metaverse. I've been pretty vocal that it's a world that I don't want really much of any part in it because I think it's just going to consume more and more of our time. As an investor, I think that this is a segment that is going to continue to gain attention in the years to come. And so, Steve, putting it together, I think that it falls more into a green area versus a gray area from my perspective, because to get a shot at the metaverse and a critical company trading at 14 times earnings, that combination usually doesn't line up very often.
So, Gene, thanks for being on. It's Karen. I agree with just about everything you said. Putting all of those factors together, what do you think it's worth? I agree with you, 13, 14 is not the right multiple. What is the right multiple?
So we're going to let me jump forward 6 months from now, once recession is priced in. I think that that's something that's going to impact all big tech. But to answer your question, I think that this should trade generally at what earnings growth should be at, and that should be somewhere in the 18 to 22% range. So I think I would put a fair multiple on this at around a 20x next year's earnings.
Really quick, Gene, you don't think recession is priced into big cap tech? I mean, even Facebook, for instance, down 40+% going into this print. That wasn't pricing in recession at all?
No. I think what's going to happen is we're going to get this relief. I think Apple numbers are going to be strong. I think that investors are going to quickly shift their attention to what happens in the June quarter and the September quarters. I vividly remember as an analyst in the pullbacks of the financial recession, the feeling that everything is going great with these companies, but there's something out there that could really slow things down. In fact, that does happen. And so I think that we're still haven't hit the bottom here. It's going to be bumpy across the board for all big tech. I think once the numbers start to get ugly from a recession standpoint, let's say in Q3, Q4, once companies start talking about it, from my perspective, that's when the bottom is. And I want to end on a good note here, Melissa. What that sets up is 2023, I think, is going to be a solid year. I think you need to be positioned in these companies exiting this year in anticipation, which should be, may I dare say, a great year for tech in 2023.
The silver lining to a recession.